Wednesday, May 31st. Market analysis, Stan Ehrlich, good morning. Recording a little bit late today, 10:30 California time. Usually it's around 9:45, 10 o'clock. The reason is I wanted to see if the market would start to rally, and it has. We have the S&P 500. I usually start out with the stock market indexes and the S&P, and that's exactly what I'm going to do again this morning. So the daily data chart we start with. We've seen recent new highs for the trend for many months. The lows are all higher. The bull market is still very much intact, in my opinion. And we're having a modest down day at the moment, 2.5 lower. We made it back down to a small area of support. There's a lot more at lower levels. And I am expecting the market to bottom out, and it may have been the low this morning already, and then make new highs. If this low today is not the low that I'm looking for, and it's going to happen the next few days or less, I expect, then we could dip a little bit lower, but not really too much. I'm looking at 414, but today's low is 16, so I was within 2 points. Close enough, really. It's a little difficult to come up with an exact number, but I like what I see. I wouldn't be surprised if this closed a lot stronger than 2.5 points lower where it is right now, which would be great, especially if it could close higher on the day. That would be a little bit much to ask, but not terrible. 230 lower now, coming up a slight bit. Look at the 1-minute chart. This morning we opened a little lower, had a rally, closed any downside opening gaps right away, slipped off to lower levels, and here's your 216 or 416, excuse me, bouncing around for quite a while. And finally, lately, in the last few minutes, we're starting to see new highs for a few hours. So this is the way lows occur. The trend is up. Trend is your friend. All looks good on the average. I don't see anything wrong either with the DIA. It dipped off a little bit. It's been significantly softer, but still no major breakouts, nothing really wrong here. We're fiddling around a little above and below the only major bull trend line that we've got. I'm actually going to lower that line a little bit because I want to put it across the lows of a couple of days ago. It's still in the ballpark, so we don't want to keep breaking it, that's for sure. But a minor adjustment. And now I think it's ready to have minor short-term new highs. It has to eat its way through all of this trading range we've had since last November and start to break out like the Qs did all by themselves at first, and then the spider came along and did the same thing. The DIA never quite made it strong enough. So be it. Let's go to the futures indexes. By the way, the Qs are overbought, and that means they could have more of a downside correction. There is a gap to close also in the Qs at 330, 330-ish. So there's a chance we could see a little bit more weakness in the DIA and the S&P if the Qs decide to go down and close their gap, which looks a little iffy. That's one of those gaps where I'm going to say maybe it's not going to get closed. Gaps are almost always closed. They're like a black hole in space. They tend to suck the price action back into the gap area. We've seen it happen many, many times in only the last 6 months to a year. Futures. S&P 500 is also the E-mini, a futures contract. And so everything I basically said for the spider goes for the E-mini, except the longer trading hours provide for different price ranges and provide for different signals to some degree. The major formations are almost always going to be the same. And that is, very bullish here, intermediate to long term. I am expecting new historic highs by the end of the year in the S&P 500. Next chart. Interest rate futures, the 30-year long bond bounced off of support levels. We saw it coming. It got oversold at the same time. It's bouncing off the support line I drew in here. And bingo, we have another rally day. So after being oversold and at the line, this is our third now in a row rally day, now getting closer to the beginning of some resistance, which is approximately 129. I think it's going to get to it and through it and start getting back into the 30s. But the key here is to close above 135. That would be a major bullish long-term breakout. And I do expect that to happen 1 or 2 months. Next is the 10-year notes. They also have come back down into support, generally speaking, not violated any support levels or bull trend lines. They also have started to rally now for the last couple of days, today being the third day up. They were also oversold. They're getting a little closer, a little quicker to the resistance area in here. But again, the key is to close above the highest highs we've seen for basically the year and going back a little further than that, back into December. So looking forward to that very soon. Next, crude oil. Down we go. Another new low close for approximately a month almost. And this time we're going to break probably this blue support line I drew in. It's not tremendously important, but the fact is, every time you drew a line off of previous lows and earlier dates, they get broken. And in fact, every single one of those points got oversold at the time they occurred. So I'm thinking it's going to happen again. At this time, it'll be breaking basically 2 other lows and be a little bit more bearish. So trend is down, looking for lower levels, considerably lower levels, and relatively soon. Remember, the last phase of a bear market is typically a very fast collapsing exhaustion, oversold deeply, 2 or 3, 4 days, maybe only one, just like October 13th last year. We caught that turning point in the stock market indexes across the board. Fabulous day. Won't forget that one for a long time to come. Next, we're getting close to oversold here too. So it may take a little bounce or two, but I'm expecting new lows very soon. What about heating oil? Same story. I'm expecting that yellow dashed line at 2.14-ish to be broken soon. And that's going to be a major downside breakout also. That's 2 energies. How about natural gas? Well, natural gas, we actually had a sell signal outright a few days ago on the 25th. It has closed lower the next day, the next day, the next day, and today's the next day, 4 probably days in a row since our sell signal. What can I say? I'm looking for new lows for the previous bottom, which was around 2.18 to be broken, and lower lows after that. The trend is down. I think the downtrend is going to accelerate a little bit. Next, gold. Gold, silver, and platinum, we picked the bottoms back in February on all 3 of them. We now have another buy signal yesterday. I screamed bloody murder about that buy signal yesterday. Today, the low is almost exactly on the bid 197, 19. I can't read it, just a click here. $1,971.70. And it's a profit, and it's going up, and it made a high higher than the signal day yesterday. There's nothing wrong with the way this is acting at all. It's actually pretty perfect. I'm looking for higher levels. First of all, a little stumbling is going to happen around 2000 because that's the beginning of some decent resistance. We've already been up to 995, 1,995 today. I'm looking for a test of the highs of the trading range that we saw March, April, May. And that would be around 2077-ish. Next chart is silver. What an incredible combination we've got in silver also. Come on. We got the low on March 10th. We got the first high of a double top. You didn't know it at the time. It was going to make a double top, April 14th. And we got the second high of the double top on May 5th. Plus, a couple of days later, you had a complimentary new short sale signal the day before it crashed. Major breakout to the downside. You measure the downside objective in the double top, you end up with an objective of 22.97 approximately. We were closing below that only a few days ago, one single day. The next day, we had a bullish engulfing green buy signal. Come on. It got filled, the bid for ER3 2 days later. Today's a new high and a likely new high close since the buy signals and the fills. It's working perfectly. End of story. Next, platinum. We're oversold, so it should start bouncing. I might get a bullish ER buy signal in the next couple of days. The stage is set for that, but I don't know if it's going to happen. We caught the bottom February 27th. We caught the top, and I mean to the day, of course, you can see it, January 11th. We had some great buy signals and some great sell signals a little earlier. Next is copper. Not much to say. Bear trend, looking for a test of previous lows, probably going to see new lows for the trend down in just a few days. Next, grain markets, soybeans, broke support, broke lows, and today has tested to the almost to the exact penny, it looks like, the major historical low, July 22 of 2022. So last vestige of support for over a year, well over a year, is today's lows. And I think we're going to break it. But wait a minute, we are oversold today. So it might take a few days, maybe a week or two at the most, and a bounce is going to happen first, and then lower lows. I don't see anything at the moment that's causing me to believe that we're going to have a major bottom here. So bounce and then break down substantially. Now it could collapse right away, but looks like it's already in the stages of starting to bounce a little bit. We got soybean oil. We had a buy signal that worked for a few days, not particularly well. Same for that buy signal, same for that buy signal. And this one didn't work at all. That was great. That was a really good bottom. So what do we got? Another oversold condition today, starting first day for a couple of weeks. And I expect a modest bounce in the bear trend. Looks like 50 and small change is a very reasonable expectation. Next chart, soybean meal, oversold also. So a lot of these grains are oversold and looking like they're going to have some mild bounce. The trend is definitely down, little question of that. It's just a matter of where it finds the resistance levels above and turns back down to test the lows. In my opinion, corn, we were oversold and bounced very nicely. Now it appears we're getting set to test support again and maybe make new lows for the move down. Now, that's it. No other comments. Wheat, same thing. We came super close to being oversold this morning. And, super close is almost there. So coming back up to around unchanged at the moment's not bad, but I think this is still a bear trend. I don't see any major bottom developing yet at all. So I'm looking for lower levels. Next is going to be live cattle. Today's the second day in overbought conditions. Don't chase a bull market up. Buying at these levels would be very, very risky. I'm looking for a short-term downside correction. And then to be a buyer, I expect very soon. The trend is still very strong. Now, you want to be a little careful here. This could develop into what we call a blow-off top. Look how it's getting stronger, faster, quicker. The upside momentum on a daily, weekly basis is gaining ground substantially. If it jumps up substantially in the next several days, I would start screaming bloody murder, major top, blow-off top. But that I'm premature by a few days, let's say a week. If we get a super strength, I would expect RSI to get way up in the high 80s and maybe even in the 90s during a blow-off top blow off type of a top. Next chart. Live hogs got oversold on the way back up. You left a small gap behind this morning. Gaps are almost always closed. So once we bump against resistance, probably 84-ish, not too much higher, we should turn down, close the gap, and then keep on going down. The trend is down. I don't see any major bottom here. It is noteworthy that we got down to 11.5 on the RSI scale, which is incredibly low. Looks like that was way over a year and a half for the lowest RSI reading we've seen. And this does look a little bit like exhaustion weakness. If all of that bearish end of the bear move talk is true, this might be called a breakaway gap to the upside in the future. Again, that means this type of gap is less likely to be closed, and we've seen a bottom, but I can't say that right now. I don't have enough indications. Right now, I'm looking for it to bump against resistance, flatten out, and turn right back down again and test the lows. Next chart is OJ, got overbought. We're looking at a pullback, right back into some support here, at least the beginning of it. I'll wait to see what happens next, but I'm still bullish. Next chart is Cocoa. We've had a top starting to develop. It's acting a little bit unusual, but I can't rule out a possible head and shoulder top. Maybe I should actually be dropping the neckline down just a little bit to about there and see if we cross below that line, it doesn't drop like a rock real quick for a couple of days. That would be much more classical bearish head and shoulder top activity. The last shoulder high may still be developing. It could break out today, any old time, making a low lower than the bearish engulfing, which is still a good sell signal. Never did hit the protective stop, the yellow dots. It's just not profitable momentarily. So getting below that low would be a breakout on a closing basis. It needs to stay there or lower. Watching very closely here to see how this iffy looking pattern develops. Next chart is sugar to sweet, and I still expect to see some lower levels. I don't think this modest top is finished yet. I do have to point out, just like I did in the other chart, that RSI readings in the 90s are pretty rare. And when they happen, you almost always have some significant bearish turning point. This one is delayed significantly, a couple of weeks. You don't see that very often at all. And definitely there's divergence involved in making new highs in price over 2 or 3 weeks, but the oscillator could not do it, didn't do it. And even on rallies, we couldn't make and stay into new high ground completely. So there's a chance for developing a much more significant bearish top here. That's the best I can say. And back to the E-mini. Thanks a lot, everybody. I will not be making recordings next week, a little R&R. So there'll be 1 week next week, and that will be starting on Monday, the 5th of May through Friday, the 9th of May. Have a great day.